May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the Euro USD. The Euro USD. Uh, this is the monthly time frame, and you can see we have a swing low, swing high. That is not a swing low. It's a low for sure, a liquidity low. This isn't a swing high. All right, that is a liquidity high. Why? Because we are inside of the last swing high and swing low. If we are within this, we have to wait until we see a break before we start saying, "Oh, this it broke the previous swing high. We are bullish. It broke the previous swing low. We are bearish." We are inside of it here and here. So we finally get the breakout to the downside. We are bearish. We are in continuance of a lower low, lower high, lower low, and quite possibly a lower high in lieu of the next lower low. Now, I hope you get that part. That is structure. All right. If you think I'm reading it wrong, leave me a comment. All right. But I believe I am reading it right. This is the last break, a bearish break of market structure here. And it's a bearish one. So we are bearish until this high is taken. That's when we can say, "Oh, we're bullish." All right, you got it. On the monthly time frame, the swing structure on the monthly time frame. This has to be seen as a correction to the last impulsive move down. All right, and we are still in correction territory until we take out that high. So let's move to the weekly. On the weekly, what do we see? Impulsive move, correction towards these highs, and we're respecting that high, okay, from the monthly. Remember that we're on a weekly now, and we want to see how did last week close. We closed bearish. We closed very bearish relative to the previous weekly closes, right? That is a bearish. That is a bearish move. We have a bearish close here, and I want you to see this. All right. When we're closing below lows like this, all right, we have a buy up before a stronger close down. Uh, that is an order block, a bearish one. All right. That prevents price. That is a block that prevents price from going higher. You understand? All right. Well, potentially anyway. And these could be considered market structure shifts. All right. And that's what I'm looking at right now. You can see how far I reached down. All right. We took out the liquidity of these lows here. All right. The sell side liquidity. And when you see the pullback, all right, does that mean we're going back all the way up? No, we have the next sell side liquidity target right here at 1.1527. All right. And we could be heading towards this one. But right now on the weekly, I am expecting another bearish candle because we closed well below the low of the previous bearish candle, which was an inside candle relative to the one prior to it. This is where you see a change in direction when you see these inside candles, the inside bar rather. All right, so I am looking for price to target the previous weekly low and this low here, the one I just pointed out. Okay, now if we go to the daily, what do we see here? This is where that original line that I wrote, I drew for the market structure shift to the downside is relevant because you can see price had a little problem getting past it here, and then we finally get a close past that low. We didn't close past this low, the new low, but this one closed within the range. This one did not close within the range. Got it? And then we see the bearish closes after that as price headed towards these liquidity lows here. And I think that will continue. Now, we had this bullish move at the end of the day, towards the end of the day on Friday, but this is a news scandal. Trump announced new China retaliatory tariffs and all, and the markets reacted. A knee jerk reaction, in my opinion. I think this is going to be temporary. And what we see is the market make this buy up before the strongest sell off. So I am looking at this area as an area of fair value that price could come back and trade into, find uh, resistance, and then continue down as it's been making lower lows and lower highs. Got it? I'm thinking this, we'll find that lower high somewhere around there and pull down. Now, uh, we don't see the fair value gap that I like to see. There was no fair value gaps formed. That that's instructive insofar as uh, I would always ask what would prevent price from just rallying up higher. The next opposing candle is up here. All right, the most recent one. Okay, this one has already been this low is where I'm looking for price to find that resistance first. That'd be the first place I'm looking at because it'll act as a a premium array. This is the range of price from this high to this low. The midpoint is the equilibrium, right? And I'm looking for price to get back to equilibrium where it would find some resistance. And that's right here at these lows. Got it? So this is the area I'm going to watch first, right in between here. You see, in this area, there was a lot of activity. We had the wick of rejection, and then price filled that wick. All right. This was the original swing point. Price danced on it here, and then we finally penetrated through. I'm thinking that area is going to serve as resistance this time on the next uh, pullback. All right, that's where I'm looking at now. That's what this is my first area here. The second area will be at the opposing candle up at 705. So we have two areas, like I showed you on the US dollar index, the mirror version of the the mirror image of the euro. I'm looking at two areas that price could find support for lower prices. I mean, find resistance to for lower prices. So that's what I'm looking for from those areas. This one being the first one. Okay. I hope that you enjoyed this video. Make sure you hit the other two videos that I just put out. That'll be the US dollar and gold. All right. I already put those out a little while ago. So check those out and I will see you in the next video. Thank you for watching. And don't forget to hit that boost button and the like button and leave a comment.